minutes before we officially launch the webinar today. Let everyone trickle in. But we have an exciting agenda today for everyone in celebration of the Rex launch. So stay tuned. We'll be back shortly, and we can kick it off. Fantastic. Well, attendees have even doubled already in the last minute or so. So fantastic to see that. But welcome everyone once again to the webinar celebrating the Rex launch, RealEstate.Exchange by DigiShares. It's as you probably saw on the graphic and materials, we have a variety of people coming to present with us and really be able to allude to the Rex platform and what it's going to be enabling for tokenized RWAs. But today we have people speaking from Polygon, Privado ID, zkMe, Texture Capital, Trade Estate, FraXion, and of course, DigiShares themselves. So without further ado, I'm going to hand it over to DigiShares CEO, Claus Skaaning.
Thank you very much, Jason. Thanks for helping us out here today. It's a great pleasure for us to host the event today, and I think it's the most significant webinar that we had of more than 50 over the last few years. We sold 321 tickets, so it's also, I think, a record ticket sales. I personally am down with the flu today, but I didn't want to miss it. I'm extremely proud that we finally launched Rex after 3 years of hard work, both on the legal and technical side. And really, it's not just because of DigiShares. I would say it's due to collaborative efforts from 5 different firms who all share a vision that blockchain-based services need to be more efficient and less costly than existing ones. They need to be transparent, egalitarian, so allow for equal access for rich and poor, retail, institutional, experienced investors, and so on. They have to be disintermediary in nature, no more CSDs, PSPs, and so on. Self-custodial in nature as well, something we believe in, true to the vision of blockchain. And finally, they should be highly innovative to matter at all, right? So we see that Rex is innovative in 2 ways. It's the first blockchain native peer-to-peer marketplace for tokenized real estate anywhere in the world, as far as we know. And it's the first marketplace to make use of new decentralized ID technology, enabling users to own and control their own KYC, and enabling KYCs to be reused across the tokenization ecosystem at a fraction of the cost. This is what we call DITO, decentralized ID for tokenization. Gable will say more about it, as it's a free and open standard, free for anyone to use, and it's not, no single vendor is benefiting from it. So we hope it can become a standard to everyone's advantage. So the partners that will all speak here today are first and foremost Texture Capital. From our viewpoint, a highly visionary broker-dealer and ATS in the space, providing regulatory and technical access to the licenses so we can launch the exchange on top of their framework and infrastructure. And then, of course, Polygon, one of the largest L2s with the best business development team in the industry as far as we are concerned, huge user adoption, and just a nice and friendly collaborative spirit. Also with a lot of innovations coming to the chain all the time. Then we have Privado ID, a spin out of Polygon, very visionary and innovative provider of decentralized ID technology. recently launched the Billions network to spread the idea of reusable credentials for KYC, proof of humanity, accreditation, and so on. Extremely exciting. And finally, zkMe, one of the most innovative KYC firms. And we looked around for a long time before we found this company here, really embracing the idea that KYCs needs to be user-owned and reusable in the future. That's the way the trend is going, providing the actual verification component that we use in DITO and REX, and hopefully in the future for all our Y-level clients as well, and hopefully also by other firms in the industry, so users can very easily reuse their KYC across different platforms. And finally, make tokenization interoperable. Then finally, of course, today I'm also proud that we have two asset owners in the real estate industry presenting the first companies to list on REX, RealEstate and FraXion. So have a good evening, everyone. That's it for me. Thank you.
Fantastic, thank you. And as you guys can probably figure out, my name is Jason Barraza. I'm COO at STM.co, and I'll be your moderator today. For context, STM.co is the largest data aggregator for tokenized RWAs. We track 700 plus security tokens worldwide, worth over $60 billion worth, and we're actively onboarding right now another 10 billion. So keep an eye out. But with that, I do want to ask you, Claus, while we have you, what are your thoughts on the current state of real estate tokenization market, and how does REX fit into this landscape?
Yeah, REX fills a gap in the market that we've been seeing for several years, right? So first, I would say we've seen, I guess, three challenges over the years, right? One is usability, poor usability of platforms and functionality in the space. I think that's getting rectified. It's becoming easier and easier. And then I would say difficulty of sort of getting on-ramped into the crypto ecosystem, and fear and concern about using crypto. That's also going away. And finally, I would say a lack of a buy side for tokenization. That's still a problem, still a huge problem, and that's what we are trying to solve with RealEstate.Exchange. We didn't actually want to launch our own exchange to begin with, but we really didn't see anyone else launching anything successfully, right? So we think it's a necessary requirement for tokenization to succeed.
Makes sense. Makes sense. Appreciate that. And quick follow for you. What would you say are the biggest opportunities that you see in the growth of tokenized real estate in the coming, call it maybe 3 years? And how does DigiShares and Rex really see, see these opportunities for yourselves, and how you guys can tackle them?
I guess it's about, at first, I guess it was about making real estate digitized, right? Reducing administrative costs. Now I would say it's about making it liquid. If it's liquid, it's worth a bit, maybe 20% more, because it's more attractive for investors. So that's what we're working on now. So I have a cough. And then the next step will be to make it usable as collateral, right? This need to be liquid first before it can be used as collateral for DeFi lending, and that's going to be the next step within a few years. We have sort of the partnerships lined up already to make that a reality, but we need the liquidity first.
Totally agree, and I think that's something, obviously, we walk before we run, and that's something you guys are calling for here with the Rex exchange, excuse me. And of course, adding utility, adding real life to these assets is really what tokenization is empowering and giving people, asset owners and investors, therefore, as well. So really curious to see how that, especially on the collateralization side, expands over the next few years. But in the meantime, I do want to move on to the partners that are here joining us on stage to talk about their different involvement. And I want to kick it off first with Polygon. Colin, Butler, you're joining us here. Thanks for coming on, man. Tell us a little bit about Polygon's involvement with the RealEstate.Exchange platform, and what you're working on.
Yeah, thanks a lot, Jason, and thanks a lot to Claus for having me back this time. I love to see the tokenization dream team on this call. Like, these guys are the forefront of tokenization. I think we've all been working for this more decentralized, more efficient, cheaper, faster future whereby you can do a lot more things with assets because it comes on chain. And so I really appreciate, first of all of your contributions to what's happening in the space right now. And Polygon, for its part, is very, very pleased to be a part of that. What we think we bring to the table is, quite frankly, users, right? Polygon has the second largest ecosystem outside of Ethereum in terms of number of developers. It's got a multi-million global user base. And we're excited to really bring this DigiShares real estate asset offering to our global community really for the first time. What the core protocol does is it's essentially a suite of Ethereum scaling solutions. So it's meant to create very easy developer experience with high throughput, with low cost, and provide a very easy pathway for people to come on chain from the off-chain world. I'm actually going to share a couple of slides. I generally don't like to share slides, but I really want to give everybody on the call the idea of what I see as the opportunity and why I think this launch of Rex specifically is so exciting. So I think we all know a little bit about tokenization. We all have the vision for where it can go. The idea that by taking things off-chain, putting them on-chain, much cheaper costs, a lot less friction, you could potentially take a multi-month process in real estate, take it down to essentially almost atomic settlement at its best. And I think we're a little ways away from that. But I think the vision that Polygon really shares with Claus and the DigiShares team is that of this decentralized future where a lot of that's possible, where you can easily and seamlessly buy and sell these assets in tokenized form and ultimately use them as collateral and do all the other cool things that we think blockchain can bring into the mix. So what's the path to success on that? We're right at this inflection point, in my personal view. The technology has matured a lot, but we're still right at that precipice of adoption. One thing that we've seen in the past year is a lot of the large traditional financial institutions coming into the game in a very real way this time. So you can see very publicly what BlackRock has done, what Franklin Templeton has done, and a lot of these are on Polygon to make these assets more accessible to the general public, global retail. And what we hope to achieve from the blockchain perspective at Polygon is to really bring our users this unique offering in the form of Rex. Let's say we have currently around $500 million in on-chain money market funds on Polygon on its way to billions of dollars. Like we really do see visibility probably, in the next 12, 24 months to ultimately potentially billions and billions of dollars in adoption. And to the extent that our community is looking for places to invest that capital and unique things to do on chain, we're super proud to, in the near future, be able to offer Rex as one of those alternatives for investment of those dollars and those tokenized assets. So here's the big picture. This is something that I think is pretty typical. I hope a lot of people have seen it at this point. But for the folks that haven't, this is what DTCC uses, the largest clearing organization in the world, clearing around $2.4 quadrillion a year, as their number as where they see the vision for the tokenized future. And the highlight that I usually point to is the $16 trillion on chain by 2030. And we expect real estate to be a large part of that. And I think DigiShares is really making the first large credible attempt at bringing a lot of these assets on chain and cracking that market. A lot of challenges, as I think Claus alluded to. The challenges are supply of high quality assets, distribution, who's going to buy these things, and ultimately, I think what DigiShares is going to solve, in addition to the first two, is going to be the user experience. Crypto blockchain has this massive challenge by which it's really difficult for regular people to access these platforms, these protocols, these utilities, because it's so complicated. And so from our perspective, what we think could be a critical unlock in the very near term, to the point where we can really start moving along that inflection point of adoption, is for DigiShares to make these assets very easily accessible for our global community. So that would speak with the third item, venues to market, whereby we think by collaborating with DigiShares and the other folks on this call, make tokenization very standard. We make it easy to use, make the user experience easy, and ultimately bring in, from our perspective, a lot of cross-chain liquidity, whereby all the liquidity within the blockchain space becomes accessible for projects like Rex and DigiShares. And I think if we can do that, we can see a lot more utilization in the near term than I think we've seen in the past. So the road ahead, again, we're already past a lot of this, thankfully, because of the really hard work by the people on this call over the past 3 years. Integration, getting retail on, regulation, especially in the US, as the regime has really shifted from anti-crypto to pro-crypto. We've already solved a lot of these challenges. And so I actually think we're almost fast forward to the tipping point. And this launch is really part of the start of that, right? This is where major capital can be funneled into tokenized markets. From the Polygon perspective, we're looking to bring our entire ecosystem to bear to, one, educate folks as to how this product is offered, how it works, and two, how they can access it being already within the Polygon ecosystem. So for instance, in terms of tokenization, Polygon represents about 27% of the tokenized launches to date. That's everything from BlackRock's Butler to Franklin Templeton's Benji to the Hamilton Lane funds to Brevin Howard funds. And we hope to ultimately connect all those players within our ecosystem where the liquidity ultimately becomes seamless and interchangeable between assets, and ultimately using a technology that we are in the process of unveiling called the AG layer, whereby we can also make that cross chain, i.e., crypto has this user experience issue where, say, you have assets on Avalanche or Solana, and how do we get it over to Polygon so we can do a transaction on Rex? What the AG layer does is really allows for, as an example, to take liquidity from Solana, run it through the AG layer to do a transaction on another chain, call it Polygon proof of stake in this case, in a very seamless way whereby you don't take bridge risk and you can do it under a second, which hopefully makes this user experience ultimately much more like the Web 2 experience, like the internet as we know it today. Whereas you're on one website, you go to another, you can use your, call it credit card in this case, very seamlessly. And for the Rex users and for the Polygon users, we hope that that will apply to fractionalized and tokenized real estate. Big wins are likely in the near future. That is starting now. You know, in the recent past, we said, okay, finally we have call it BlackRock's Butler on chain. We have a lot of assets moving on chain. Once they're on chain, what can you do with it? This is going to be the answer right here. It's Rex, it's tokenized, fractionalized real estate. We actually think the future is starting now. We're super, super excited. And I've kind of already gone through the learning, so I'm actually going to pause my presentation because I always hate going too deep into slides. But I think I want to finish off by sharing my excitement for the opportunity at hand. From our perspective, we're going to work really hard to bring our global community on board because we think this represents a really unique frontier for the next phase of blockchain adoption. So super excited to be here. Appreciate everybody's time. Klaus, again, thank you for having me. Jason, back over to you.
Love it, love it. Thank you so much for that overview, Colin. I think it helps really setting the stage for everyone on the call here to understand where have we been, excuse me, and where are we going in the tokenization space. And I think you're right. We are at an inflection point now where things are moving a little bit quicker. Obviously, the U.S. markets being a big factor globally, of course. But not to mention, of course, even in non-US, there's plenty of tokenization happening. And a lot of great platforms. Obviously, Rex is going to be available to a lot of people worldwide. I did want to ask Colin, can you explain a little bit more about Polygon scalability solutions and how that's really enhancing the Rex trading platform?
Yeah, you bet. So the name of the game initially in blockchain is speed, ease of transactions, high throughput. So how many people can be doing an activity at a time? At Polygon, we believe that we have the most forward-looking solutions for that. Polygon spent about $1 billion in buying what they call zero-knowledge roll-up teams. And so we would argue we have the most secure, among the fastest throughput or TPS, certainly the most stable. You know, if you're looking at transferring billions and billions of dollars on chain, especially for commercial or institutional use cases, you need something that's highly secure, highly stable. So Polygon now at this point has a proven track record of all of those things. It's probably the most regulator approved chain, given that we've had some pretty high profile launches in Germany at this point, and Italy, certainly the US, where the broad swath of leadership at Polygon is based. So for us, it's really about providing that best user experience, cheapest cost. And ultimately, at the end of the day, for things like Rex and DigiShares, what we hope is that Polygon will be relegated to the background, right? We really hope that ultimately our users won't even know that they're transacting on Polygon because it's such a seamless user experience that it really operates below the surface. And I think that that's where we're headed with this project and others.
1,000%. As we like to say, a Web 2 front end and a Web 3 back end, right? You really want the user to just make it as frictionless as possible, right? At the end of the day, the whole point is to get them from A to B. And I think some of these solutions are obviously very, very helpful for that. There is a question in the chat here before we move on, Colin, since you did allude to some of the US and whatnot, but they're asking, you know, from Rakesh, what do you think of US institutional grade commercial real estate debt fund markets, and how, you know, they're going to be transitioning over to being available to retail investors?
Yeah, I think what we've seen in the non-real estate sector transitions very well. You can take the idea that Hamilton Lane or Apollo private equity funds now on Polygon essentially went from like a $5 million minimum, whereby you could only access it as a qualified purchaser or a pension fund. These are really purely institutional products for which the vast swath of, call it like $30 trillion in global retail didn't have access because of the high minimums. And through the technology or magic of tokenization, you can take that minimum down to $20,000 or $10,000 as a minimum. So what we hope is to give access to, for instance, as an example, all those premium properties in New York City that are super well known. Let's take the Empire State Building as a random example, that ultimately we as a platform could allow access to for our global community through a protocol like Rex. So because of what's happening in the administration in part, very, very bullish on tokenized real estate in the US. I think products like this are going to open up access to all of this supply, not only in the US, but globally. And I think this is probably where it starts. We have a regulatory backdrop that's currently very favorable, and so timing couldn't be better for a launch like this one that ultimately will allow access to all of these real estate assets in the US.
Fantastic. Well, thank you. And absolutely, you know, the more we see some of that granularity, it's also great for investors. One, you're right, for the minimum obviously coming down and be able to open it up to more people to participate. But on the other hand, too, even when you're looking to rebalance your own portfolios, it's like, okay, well, I don't want to liquidate a large amount because that's the denomination of the token. Maybe I want to do it at a smaller denomination, and be able to again be a little bit more granular with that. Thank you so much, Colin. I appreciate that. With that, I do want to transition over back to the DigiShares team, Gabriel Sadoun, Martin Hodka, and give us a demo. I want to see the DigiShares, the Rex platform. I think a lot of people here do want to see. That's why we're here. So let's check it out. Let's see the platform.
So yeah, we're gonna keep the best for last. So the demo, what everybody is excited about, will be just after me. But for now, just a few boring slides before the excitement of of the demo. No, just kidding. Hopefully it'll be a little bit interesting. I'm going to share my screen just a second. Here we go. All right, so just a quick overview. Claus already touched upon a few points, but there was a real need in the market for this. A lot of the existing trading platforms were more geared towards institutional use cases, with just because of their fee structure and the way they were set up, and they're not focused solely on real estate. So we wanted to really solve those two issues and create the go-to venue for trading of tokenized real estate shares. So this is a platform where you can bring your own self-custodial wallet. Settlement is on chain. So it sort of looks and feels like a DEX, although of course it is not fully a DEX because you need to comply, and that's where our partner Texture fits in. Richard will speak after. They have the ATS license with the SEC, and so just to make sure everything is compliant. This venue will be accessible to both retail and accredited investors, because even if your initial investors are accredited, after a 1-year lockup, retail investors can trade with them. Yeah, there's this really cool new way to deal with KYC that Claus mentioned, and that Martin will speak a little bit about right after. Just to keep you updated on the full picture of Rex, because we're talking about the US right now, which is launched as an open beta for now on a test net. But we do have a global vision. So we're working on AMM products for the UAE, South Africa, and the EU. We're actually in the European Union's regulatory sandbox for the REX AMM. And then after that, we'll look at decentralized lending. And just to give you a picture of the way REX will work in the US. So you have a primary, let's say, a primary issuance for multifamily LP shares. That the security tokens can be created on a DigiShares platform. Then investors are initially onboarded on there. You can manage your cap table. And once trading becomes possible for those investors, they can create an account on REX and place a sell order. So it'll be an order book. Again, it's not an AMM for the US version. Anyone on the REX platform can then place a buy order. And these two parties can transact on chain. And of course, there is a integration between REX and DigiShares so that when a transaction happens, that the cap table is modified, adjusted in real time. And of course, the integration with Texture, communicating data to them to ensure compliance. Then just on a few of the benefits, why would you do this? First of all, liquidity optionality. So today, if you want to sell shares if you're an investor in a real estate project and you want to sell shares after the 1-year lockup, well, it's extremely difficult. It's a whole manual process. You have to get a lawyer involved so that they make sure that they attest that the lockup period has ended, and they run checks on the investor that's purchasing. You have to get a broker involved to manually broker the transaction. So it's just a very painful process, which is why it's not done on a wide scale as the vision of REX is. So the idea is we have one platform. It's not isolated manual transactions. There's one platform where all of the eyeballs are, and people are looking to buy and sell shares in real estate. And so if you do that, and if we're successful in bringing a large amount of people to the platform, then you decrease liquidity risk, because if you tell an investor that they can sell after the 1-year regulatory lockup period versus being locked in for 5, 7, 10 years, well, that makes the investment more attractive to them. It decreases their risk. So second is just automations. Again, really making sure that we completely disrupt the current manual process of a secondary trade of real estate shares. Eliminates intermediaries, and the transaction remains compliant, because you can code certain things directly into the token, such as the necessity for a buying wallet to be associated to an identity that was successfully KYC'd. You can set minimum and maximum investments amount directly into the token, such that a human does not have to verify these things. So that's the main point. Democratization. It's not just about democratizing the primary investment, like is the case in crowdfunding platforms today. It's really enabling accredited and institutional investors to trade with retail investors on a secondary market. Just like if you think of the stock market today, seed capital. The initial capital for most companies is provided by larger institutional investors. And then when the IPO time comes, that's when trading with everyone else can start. So this will be a similar, Rex will enable a similar structure where, let's say you issue under Reg D, you have your accredited investors, and then after a year, if they want to sell, well, they can sell and trade with retail investors. And then future proof, you would basically be ready for the next wave of new financial innovation. And the first that we're gonna focus on is decentralized lending. And just one last bit about listing requirements before we move on to the demo. We do require a US entity, and in a state that authorizes the tokenization of shares. We see Wyoming be is very popular for that. Your shares need to be tradable on a secondary market. So that's not always included in the offering documentations, because today it's pretty rare that you're going to trade shares on an ATS, but we aim to change that. But so you have to make sure you have that clause in the offering docs. Of course, you need to have a Reg D or Reg S, or issuance under an SEC exemption. All of the information regarding the asset. Reg D, it's important to note that Reg S investors, so non-US investors, can trade immediately after the primary issuance. So if you want to enable that, there would just need to be 2 different token classes. Yeah, you would want a DigiShares subscription to manage the cap table. Then we put you in touch with Texture for a listing agreement. Then they perform the due diligence process, and if that's successful, you can list on Rex. With that, let's take a look at Rex with Martin.
Yeah. Hi everyone. I will just quickly share my screen. Yeah. So here we are on the sign-in/registration page of RealEstate.Exchange, and basically the only thing you need is a wallet. You can either use a wallet from your mobile, leveraging Wallet Connect, or you can use one of your favorite wallets. I mean, MetaMask, Coinbase, or Uniswap. There are also other wallets which are available. And yeah, there's basically a big variety of them. But now you might ask, what if I don't have a wallet, right? Well, don't worry, we got you covered. You can also use your email, or you can use one of your favorite social logins. This way, let's say I choose the Apple login, a smart wallet will be created for me, and I can access it via the Apple account sign-in. But once I want to self-custody the wallet, I can take it from the smart account and import it into my MetaMask, for example. In this case, I will use my injected wallet, which is MetaMask. And this is basically a new user. Right now, I'm showing a demo of the open beta, which you can join right now and test as well. So obviously, since it's an open beta, it's on testnet, right? So you will need some test tokens and everything. And don't worry, we get you covered in this. So first, I will set up my name, last name, and email address. And one important thing here, since it's a test, obviously the KYC is skipped, right? So this way, the KYC verification is bypassed. And now I will just, after I finalize my email, I will click save and continue. And once that is done, the KYC bypass will take into action. And now for basically every interaction on the blockchain, you need the native token of the chain, right? So in this case, since we are on Polygon Amoy testnet, we will need the Amoy native tokens. So I will just quickly go into a faucet. You can basically use any faucet you want. we just provided this one if it's needed. I see that the captchas are getting very creative right now. So I will finish those. And now I should be set once I get the tokens. Okay, I got the tokens, perfect. I go back to the page and I will refresh it. So now, once we got the native coin, obviously, when you are buying something, right, you also need the currency. So we also created a test USDC currency, which you will be able to redeem. Yeah, you can redeem it here or here. So I will click redeem and I will fire a transaction. So I confirm through my wallet. And what's great is that once this transaction finishes, right, I want to also see it in my wallet. So I click show in wallet. And even though the balance is still 0, when I check my MetaMask, the transaction is pending. So now, looking at the platform, we have a swap component. You can see your orders and you can see the asset, right? So when I go from the right to left, we have notifications. In the notifications, you will usually see upcoming payments, which you will need to facilitate. Also, we have a pinned notification for the testnet tokens. So you have a shortcut if you need to claim them again. Then there is our Wallet Connect integration. Now for production version of the platform, if you, let's say, don't have USDC, you can leverage the Wallet Connect plugin, which, for example, you can use Coinbase to buy some USDC. And this way, basically the wallet, which you are already connected to, will receive the crypto. Now redeem, test USDC, we already saw this one. Now going to the left side, we have payments. Now, obviously, they will be empty because we didn't buy anything. We have the asset and we have the swap page. So now in the swap page, we have the test token REXT shown. And one thing which is great about the blockchain is transparency, right? So now I can click on the Polygon scan link and I can see that, okay, so these are all the transfers of the token. These are the holders of the token, the wallets, and I can also look at the code of the underlying token itself. Then there's also the website, and yeah, I mean, while we're at it, I will also add the REXT token to my wallet. And now I can see that the minting of my test USDC finished. So we have 1,000 test USDC, so plenty of spending we can do on the test platform right now. So now, basically, the next thing will be opening a swap. But before you open a swap, since we are on permissionless chains and we have permissioned tokens, these tokens can't just enter any wallet, right? The wallet itself needs to be whitelisted. And in this scenario, you are already verified, right? So when you're verified, it means that you passed KYC. You are also a texture customer in our platform, and this whitelist basically enables the token to be able to be transferred to your wallet. So in this case, I will click whitelist to take a few seconds because a blockchain transaction is happening in the background, which whitelists automatically your wallet based on all the necessary things. And now, perfect, the wallet is whitelisted. And let's first just make let's open this order, right? So to not wait. So let's buy 11 for 11, accept, and place the order. So now when we are placing the order, right? So I want to touch upon a bit what's happening in the background. So with our ATS partner, Texture Capital, once this order is placed, it's entered into their system, and the system contains a bunch of orders, right? And these orders together form the order book. And basically what now needs to happen is that your order needs to be matched with someone else's order. So while this is happening, we need to wait a bit and we can look at the asset page. I mean, obviously users will first look at the asset page and then later place the order, but yeah, it's me. So we can look at the description, additional information. Yeah, there's some demo documents which you can see. You can also see all the orders of the platform by basically all the users and see how the basically price averages. Now there's also nice pictures of this futuristic asset that I already opened an order for. So now I can click on trade now. And basically now the order is getting matched in the background. And now when I look at our payments, and yes, right now I can see that I have an upcoming payment. This means that since the swap is happening it's atomic on the blockchain, right? There's two parties or two wallets or two investors interacting with each other, right? Basically. So this atomic peer-to-peer swap, someone first needs to open the swap and the other person needs to close the swap. In this case, since we are buying, we are closing the swap. So we first need to wait for the counterparty to open it. So at least first we are notified that we have an upcoming payment. And now we check again in a few seconds and we see, oh, perfect, payment is possible. So now the blockchain settlement is happening. So here we can see that we are buying for 11 test USDC. There's a fee, 1.2%. We click sign. With this signing, we basically are signing that we approve the spending of the contract to spend 11.13 of our test USDC. So we first sign the message. Okay, I click sign. Now I click swap. Now a transaction is triggered. And I click confirm. Okay, perfect. Now this executed the transaction on the blockchain and it's processing in the background and also in our service. Now I can also look in my MetaMask. I see it's still pending. So we will need to wait for a bit, but once it's included in the block, then we can check it out and I can just fast forward a bit. So now we can see perfect, the transaction was confirmed and the order is filled. So now when I go to payments, oh, I don't see anything. And that's a good sign because when I click on finalized, I see that the payment was finalized. And lastly, I can view my transaction itself on a Polygon scan. And here I can exactly see where the funds went. So from this, you can see that 11 TestRex token went into my wallet. There was 0.264 fee paid and 10.86 tokens went to the counterparty's wallet. And this concludes the flow and the demo. Thank you.
Thank you both. Very cool to see it in action, right? And I hope the audience loves it too. This is awesome. I think it really shows, obviously the complexity that comes into building something like this. But of course, the benefits will, of course, be worth the full build. Hence why it probably took some time, as you alluded to earlier, Klaus. Quick question from the audience here was based on the fee. The 1.2% fee is the Rex fee only, or does this include any gas fees or other network fees? Can you just expand on that?
That's the platform fee, 1.2, and then there are additional fees in gas fees. But I mean, we are on Polygon, right, where the fees are very minimal. So it's very convenient for users to trigger a lot of transactions. And to also touch upon this on fees and how we are actually saving users' money is that what we build with this peer-to-peer swapping is that you can also basically peer-to-peer swap with multiple entities. So basically you saw me trigger one transaction where I was paying USDC, but what you can also do is if you have a bunch of these transactions, you can bundle them all into one, and that way you save even more on fees.
Good to know. Good to know. Awesome. Well, thank you. And I know that, as you referred to a lot throughout the demo, there is another, party involved here as well, which is Texture Capital's very own Richard Johnson is here on the call. Richard, I do want to pass it on to you to tell us a little bit more about your involvement, how you fit into the puzzle here on the RealEstate.Exchange platform and the value add that Texture Capital brings.
Thanks, Jason. Great to be here and connect with everyone. How do I get my screen to centralize here? Yeah, so my name is Richard Johnson. I'm the founder and CEO of Texture Capital. We're a digital securities broker-dealer here in the US, regulated by the SEC and FINRA. We've been working with the DigiShares team for a while here to help them launch Rex. And as you saw from that demo, it's pretty impressive what they've got going on right now. So I have a few slides I'm going to walk through. So let me share my screen. Yeah, so my company is Texture Capital. We help clients raise capital through digital securities offerings, whether it's Reg D, Reg A, Reg CF, or some other certain registered offerings. And we have an ATS for secondary trading. ATS is an alternative trading system, which we have kind of partnered with DigiShares to enable them to access that through the Rex platform. Here's the disclaimers. Glad you got all that. You're all quick readers here, right? So we provide regulated digital securities market infrastructure. Our mission is to develop a new market structure for capital markets, leveraging digital asset securities, and help bring the next $1 trillion of real-world assets on chain. My background is in traditional capital markets. I was mainly in public equities. I've been working around, with ATSs for a very long time, mostly in the public markets until we built our own one here. I've been in the kind of crypto space again for a fairly long time, since about 2015. And one of the things that really attracted me to it is, just this revolutionary technology. And I just felt that, it is fundamentally a better fabric for capital markets. So much of capital markets is about transfer of value, whether it's one asset to another, whether it's cash from the buyers to the sellers, or the securities from the sellers to the buyers, or whether it's just risk or any other type of transfer of value. That's what capital markets is about. And that's what blockchain has, at its core, is about a fundamentally new way to transfer value on this distributed ledger. So we're super excited to be working with DigiShares and the team to bring real estate in particular on chain here. So RealEstate.Exchange is going to be powered by Texture Capital, as you saw in that demo. What is on the back end? So everything you saw is all the DigiShares front end. What we're doing is on the back end. That's our alternative trading system. An alternative trading system, or an ATS, is part of it's regulated under the Exchange Act, and it is how the SEC is comfortable, or how the SEC permits broker dealers to electronically match buy orders and sell orders of their customers. There are actually I looked it up the other day, there are 70 different ATSs out there in the US market, but there's only about eight or 9 or 10 or something like that are focused on digital securities. And when we say digital securities, you'll sometimes hear the term security tokens, you'll sometimes hear crypto asset securities, digital asset securities. I guess we need to figure out what the right nomenclature is, but for now, we're going to stick with digital securities. These are essentially securities where the records of ownership and transaction history are recorded on blockchain. So sharing with you some analysis we did here. We do believe that the opportunity for blockchain is transcends every single asset class out there. As I said, we think it's fundamentally a better fabric for capital markets. But we did a survey last year and asking people, what assets do you want to see on chain? What are you looking at? And as you can see, by far the top answer was real estate. So super exciting. Obviously explains why Claus has been focusing on that. But we're looking forward to seeing many other of these asset classes move on chain as well. So what is an ATS? So we're the broker dealer on all the transactions. So we have to do due diligence on all the issuers. There's a lot of responsibility coming with being a broker dealer. We have to kind of file our business plan with the SEC and FINRA. We have to do regular reporting. We have certain standards we have to abide by. The FINRA rule book is about this thick. We've got to follow all those rules. And that should, I hope, give everyone confidence that when you're transacting on Rex, you are working with a regulated counterparty here, who ensures that these transactions and the investors and everything is done in the most compliant way possible. So the ATS itself, it handles order matching, order entry, trade reporting. We have to report these trades to the OTC reporting facility. It handles all other sorts of compliance and settlement monitoring as well, which in this case we saw a bit of that in the demo. We are actually working with DigiShares on that as well there. So digital securities, what are the digital securities we're talking about here? As I said, as far as we're concerned, it could be any type of security. It could be equity, debt, funds. We see in the real estate space, there are a lot of real estate funds. We can work with those types of companies, LLCs, C Corps, REITs. So pretty broad range, really. And I hope there are some issuers or some real estate folks on this call. We'd love to have a conversation with you afterwards and talk about how we can get your securities that you've already issued live or potentially work with you on a primary offering. We do work primarily in the exempt security space, which is where all the real estate transactions happen, frankly, and that's why Rex is such a great idea. Is because so much, real estate is such a big asset class, and yet very, very little of it is actually, tradable on public markets. Very much a private market thing, where there are, great opportunities for family offices and accredited investors, but it can be a very kind of a closed market, as not everyone has access to that. So that's what we're trying to change with DigiShares and Polygon and other folks here in the space. So, what are the exemptions that we're looking at? Well, Regulation A is a fairly new one. This came out of part of the Jobs Act, which was signed into law in 2016. This allows issuers to raise up to $75 million per year from both retail and accredited investors. So that's one of the, number one, that's you can already target retail investors with the Regulation A. That's one of the great things about that. Number two is that there is no holding period and it can be immediately tradable on an ATS. So we like Regulation A, that obviously probably provides the most flexibility in terms of providing secondary liquidity to your securities. The catch with that is it's a little bit more expensive, as you have to go through quite a formal process with the SEC called qualification. In the middle there, Regulation D. This is the most common exemption used. I'd say probably 99% of, don't hold me to this one, but 99% of real estate deals have been conducted through Regulation D. There's a few variants of this, but generally allows you to raise unlimited capital from accredited investors only. And under Reg D Rule 506C, you can also conduct general solicitation, which means that you can advertise to the public as opposed to just within your network. There is a holding period with Reg D, however. There's a couple of different exemptions you can go on. There's a Rule 144 exemption, which most people think about. That locks up the holdings for a year, and then they become tradable after that period. And as Gabriel mentioned earlier, after that 1 year period, it's no longer limited to accredited investors. So this is how an issuer can bring in non-accredited investors and expand their universe of potential investors. There's another rule called 4A7, which does permit secondary trading after 90 days, pending certain conditions, but only amongst accredited investors. But I think that's another great option for issuers who want to provide liquidity to their investors. And then finally, there's Regulation CF. And we do see a fair few number of real estate funds going down this route. You can only raise up to $5 million per year. It can be from retail investors as well. And generally speaking, there is a 1 year holding period before trading. There's a bit of an exemption there. You can trade within that 1 year period as long as you sell only to an accredited investor. So giving you a flavor of the types of securities we can work with, as you probably gathered, there's a lot of kind of nuances and intricacies. That's what we're here at Texture. We help everyone kind of stay compliant. And of course, a lot of this type of stuff, by the way, for example, the holding period, that can kind of be programmed into the smart contracts, where Rex can prevent a security from trading or from being permitted to trading if it hasn't been held for a year. Because with the blockchain, you've got that record of ownership, and it's fully transparent, and you can kind of programmatically enforce the compliance here. Okay, so yeah, so what we're trying, well, our goal here is, the real estate is generally a private market. We're trying to make them more liquid. We see there's some, significant benefits to issuers and investors there. It kind of, it doesn't make it a public market, but it doesn't. What we want to do is we want to make private markets more liquid, like the private markets. They're not going to be as liquid as public markets, but right now there's literally almost no liquidity. So any improvement here can be a significant benefit. Why is that a benefit? Well, it improves investor relations and service. If you have investors who, maybe they invested in your fund or your project 3 or 4 years ago, and life happens, life changes. Maybe they're retiring, maybe their daughter's getting married or something, and they want to get out of the position. Well, by putting it out onto the secondary market, that gives them a better experience. They're going to be happier with the kind of service you're providing, and it also gives you other options as well as a real estate developer or sponsor. You don't necessarily have to feel obliged to redeem their shares or something like that, so it can be beneficial all around. When you're talking about a primary offering, when you're raising capital in the first place, secondary trading may not be a consideration at that point. You're going to be focused on getting the money you need in to buy the land, to build the project, etc., etc. But by saying, or by having an agreement with Texture and Rex maybe, and saying that there's a 1-year holding period, but after that we want to make it available on this secondary trading platform, that could make it more attractive on the primary, potentially get more people to invest in your project from the get-go. It opens up a wider universe of investors. As I said, you can kind of, after the 1-year period, potentially some retail investors who weren't able to invest in the primary can come into your deal now and get some exposure to the benefits of your real estate project there. And it can also be, an alternative option for recapitalization. Insiders potentially, instead of potentially going to a bank, if you need to refinance and raise more capital, you could potentially sell some shares on the secondary market as well. So it gives you a lot more options, as you can see. And one other point here I put at the bottom of this slide here is that, with the technology we have now, you don't have to worry so much about all the reconciliation, all the bookkeeping, and so much that's associated with it. We've got a digital platform, we've got a digital blockchain record of ownership and transaction history, and a lot of that can be streamlined and made very, very simple for potential issuers out there. So what does it take to list on Rex/Texture? Well, any real estate sponsor can apply to have their securities listed on the platform. Reach out to Gabriel, to Claus, or to myself. We're mainly focused on US entities, but not exclusively. And obviously, we're looking for those securities that can be freely traded, i.e. past the holding period, or Reg A or Reg D past the holding period. So definitely encourage folks out there, issuers, if you've issued securities in the last, over a year ago, please reach out. We'll kind of talk to you about how we can bring you guys on board. Or if you're an investor in a real estate deal and you want some liquidity, reach out to your real estate sponsor and get them to give us a call, and we can talk about getting those shares listed on the platform. We'll need to do, as I'm kind of alluded to before, we'll need to kind of sign some paperwork, of course, and do due diligence, make sure that we understand what the company is. We'll look at the financials, we'll look at the organizational documents, make sure it's the real deal, etc. And then the cap table will be integrated into the DigiShares Rex platform, and I think kind of we went through that before. Investors will have tokens representing their holdings added to their wallets. And I think that's my last slide. So if there's any questions, I'd be happy to answer them.
Fantastic. Thank you for that overview, Richard. Obviously, compliance is key with anything we do, especially tokenized securities. So glad to see that. Obviously, you guys have been in the game for a while. You understand the space from both the regulatory side and the tech side. So You know, it's a great partnership you guys have here. We do have a couple questions for you throughout that came in from the audience. The first one being, you know, how have recent changes in SEC leadership and objectives affected the ATS business when it comes to regulations? And you know, I would also extend it to ask if it has any implications on the partnership here.
Yeah, the recent changes are great. We've already met with the SEC Crypto Task Force. We met with them like a month ago, back in February. Very much a sea change to the kind of the previous regime that had been in place. We presented a number of different topics to them around the ATS and kind of, you know, some kind of nuance and so forth. But they're clearly a lot more open to digital asset innovation. As is FINRA, frankly. I sit on the kind of the FinTech Advisory Committee at FINRA. They're always looking for, looking at what's coming down. I think we're going to get a lot of positive traction. I think, you know, in terms of the regulation, my answer to the question is I think the stablecoin bill is going to come first, and then it's going to be something around tokenization of securities. They're the kind of really big picture, but there's so many little things that can be done to improve the space, and that's what we're kind of going to be focusing on in the short term there.
Makes sense to me. And another question for you is just obviously there's a lot of complexities and connections and whatnot going on here between Texture and RealEstate.Exchange. Just curious if you could expand a little bit more on how you're really ensuring that trading on Rex remains compliant at all times. And I know you spoke to reporting earlier, but just seeing if you can expand on that.
Well, that's our job. That's, I mean, that's what it's all about. I mean, we've spent a long time integrating with, Martin and Gabriel and the team over there. And kind of, you know, there's a lot of things people want to do, and they can tell you these stories and say, oh, we want to have an AMM and stuff or whatever it is. And we've had to say, yeah, we'd love to do that as well. We just can't do that because of the regulations. So this whole platform has been designed with the rules in mind. And not just the design of it, but the KYC process. I talked a bit about due diligence and the rest of it. This is what you get when you work with a regulated entity here.
Love it. Love it, love it, love it. Awesome. Well, thank you so much, Richard. I appreciate it. And again, excited to see that you're involved here, especially with your involvement in the wider industry too. So obviously there's a unique expertise that you bring to the table here. We're going to be moving on to other people also involved here. The first one being zkMe. If we can pass it on to zkMe, David, and tell us a bit about your involvement in value add here.
Thanks so much, Jason. Thank you for hosting, and thank you to the DigiShare and Polygon / Privado ID team for having us. It's been a blast working together. I'm Alex. I'm the founder of zkMe. I also brought a couple of slides. So in the interest of time and in the interest of the attention span of most of the participants, I'm going to try to keep it short, and then maybe we have a little bit of time for Q&A at the end. Let me quickly share my screen. So, high-level introductions. zkMe is a Web3 protocol that is specialized to act as an issuer to demographic and financial data for both entities and individual consumers. So we handle a Web3 native due diligence solution that leverages Web3 technologies such as distributed ledgers, fully homomorphic encryption, MPC oracles, and probably most importantly, client-side zero-knowledge proofs in order to have a solution that is both compliant, but does not compromise on the ethos of Web3, so that is decentralized in nature and as privacy-preserving as possible. So the solution was born and founded in 2022. Out of two core realizations. So one core realization was that if we believe in a future in which DeFi and finance services that are offered through a distributed ledgers are to become mainstream, two things will have to happen. One is that the compliance requirements will have to find a balancing between traditional finance requirements and DeFi requirements, which we see recently happening, that we see MiCA being implemented in Europe recently, as of yesterday. Also, first touch points of Mika trying to being applied for Web3 projects as well. And then we also see that we want to decentralize as much of the user flow as possible. Just like DigiShare is a protocol that runs on top of a digital asset layer infrastructure of Polygon, zkMe is a KYC protocol that runs on top of an identity infrastructure provided by Privado ID. We are aiming to solve three main issues in identity. So one is the interoperability of identity, meaning that rather than having many different identity silos of federated identities where, for example, one financial service provider owns your KYC data and this KYC data is not interoperable with the KYC data of another financial service provider, we want to have one layer that allows for the ability for entities to self-verify and having that digital representation of that verification being interoperable with all financial service providers. That's the first use case. The second problem or use case we're trying to solve is for extending the scope for identity use cases. So we look for a future in which different identity protocols or primitives are composable with each other. So in the future, maybe you can use a KYC credential not only for a financial service, but maybe you can then use the same credential to prove adulthood in a game. Or you can use a gaming credential as a proxy for a credit score. So we believe in a future in which identity exists out of many different credentials, like a Lego bouquet of many different pieces that then come together in order to build use cases that are not possible in siloed and fragmented identities. And then I think for me personally, one of the most important problems is we're solving for data security. We all hear of giant data breaches happening every year that are just big honeypots of KYC data where banks have hundreds of millions of users, very personal and private data stored on one centralized database. These databases are very, very expensive to maintain, while at the same time representing a very prime target for malicious actors to target. So in short, we're trying to increase the value of data, increase the performance, increase its security, while reducing frictions, trust assumptions, and the ability to misuse that data. Our first use case, and the use case that is currently being implemented at DigiShare, is a ZK compliance solution. We call it a ZK KYC solution, in which we take existing KYC requirements and existing KYC processes that usually are run on centralized servers and stored and owned on centralized servers, and push them to the edge devices. So meaning rather than having them run on centralized servers, these verification services are run locally on the device of the entity that we are currently evaluating. So for example, if you are an end consumer onboarding onto DigiShare, you would verify yourself on your own mobile device. So you would collect data that is, for example, contained on your biometric passport, containing your name, your birthday, your ID number, and then have those data be pseudonymized. So transferred from a private data set to something that is just an abstract representation. So rather than disclosing your exact birthday, we would just disclose, is this user over 18? Is this user an accredited investor? Is this user a citizen and a resident of the United States? Yes or no? And then these yes or no proofs are tradable on chain, meaning that any participant that is active on that chain ecosystem can consume these without having to access the underlying private data itself. And in order to make all of this compliant, we not only trade in these yes or no questions, but we also trade in an abstract representation that access to the original data is available. So every single tokenization service provider that is active on chain would then also get a private key that allows them to initiate the recovery of the private data in case of bad actor proceedings. So if the regulator approaches, for example, DigiShare and says, we have conclusive proof that this wallet is involved in some kind of malicious activity, the real identity of the user can be recovered. So it is as privacy preserving as possible and as mandated by law. High level, the value proposition for businesses and for protocols active on chain is that we are able to completely remove all data liabilities. So these high costs and these liabilities of having to store data on centralized databases is completely removed. Like the only thing that you're actually keeping within your own data sovereignty is just the abstract proof that a user or an entity fulfill all of your eligibility criteria, and B, that in case of bad actor proceedings, you have access to the underlying data without having to store the data itself. And then to be very direct, it's just the ability to drastically reduce the cost of verification. By having a solution that is fully run local and fully programmatic, we're able to offer a KYC process, an entry-level KYC process at an order of magnitude cheaper than centralized solutions. So while you typically see entry-level KYC going for like $2 to $5 US per individual, we're currently offering the solution at 50 cents per user. And then for the first time in history, we are also able to provide value to the consumer, to the data holder. Since the solution is fully self-sovereign, the entity or the user are able to, at any time, know who is accessing data and for what purpose. Then, because it is fully on-chain and it is fully verifiable, the user also has control of under what kind of circumstances data is stored and shared with other entities. So if I, for example, want to be active on DigiShare, I can choose what kind of credentials do I share with DigiShare, and maybe for one of the protocols within the broader ecosystem, I can allow more or less of my private data to be shared. On a high level, we believe that three main benefits are what we're aiming for. So one is that the solution that we're offering needs to be compliant and interoperable. It needs to be user-friendly, and it needs to be privacy preserving or end-to-end zero knowledge. So we can guarantee that at all times we have data recoverability in case of bad actor proceedings, that we fulfill legal requirements such as the crypto travel rule or international standards such as the W3C standard on DID, while being chain agnostic. So you would have one identity that exists on Privado ID that is then available not only for the Polygon ecosystem, but for all other chain ecosystems as well. On the side of being user-friendly, it's very important to us to reduce the very high drop-off rates of typical KYC processes. So anyone that has ever implemented KYC knows that you ought to expect drop-off rates of over 50%. But we believe by having a full reusability in which the user or the entity would only KYC or KYB once, you drastically reduce entry barriers. And at the moment, just to throw some numbers, we see drop-off rates that are significantly lower. So at the moment, we are somewhere at around like a 20 to 15% drop-off through our KYC process. We also very strongly believe in having a mobile-first user experience. So all of our use cases typically involve a mobile device being used for the verification of credentials. Even if it's initiated through a browser, you typically would get like a QR code that you have to scan in order to complete the KYC process on your phone. That also typically reduces drop-off rates significantly. One of the promises that we believe is very, very essential for a Web3 native KYC provider is that at no point in time is there any unilateral access to PII data, so to private identifiable information. So in our solution, all data that is collected on the entity and the user is encrypted and pseudonymized directly upon data collection. So at no point until like bad actor proceedings are initiated does any party in this whole process have access to that data. And then because the data is owned like by the entity itself, there is no way that data can be shared to third parties. So the whole issue of data duplication that we see in traditional KYC solutions is mitigated here as well. Long story short, we believe that zkMe is a stepping stone towards a vision in which in the future, private data is only shared when, where, and strictly as irreducibly as needed. So we believe in order for DeFi, for tokenization, for even social fi, like social aspects on Web3 to be mass adopted, such an infrastructure is needed. Our solution is live. Here, like a little bit of look and feel. I welcome all of you to scan the QR codes or have a look at, for example, the intro video on YouTube to get a feeling on the user experience. We believe we're one of the biggest, if not the biggest, on-chain compliance provider at the moment. We just crossed 1.3 million users KYC'd on 24 different chain ecosystems. And in general, I want to get your attention to the available credentials that we have. We tackle entry-level KYC. So we start with proof of personhood. Are we sure that the person that is currently interacting with your service is a real human and not a bot, and maybe not a Sybil account? Then usually we would go further into proof of citizenship, proof of residence and location. And then just recently, as we're actually launching this week, we also launched credit score credentials and accredited investor credentials, just to more and more expand the scope of what can be proven about the wallets and the users that I'm engaging with. With that, I leave it to the questions. So thank you very much for taking the time.
Fantastic. Thank you for this presentation. I think obviously privacy is on a lot of people's minds, right? Some people care a little bit more about it than others, but regardless, the whole point here is obviously there's information that is just very sensitive that needs to be verified for access, but doesn't necessarily need to know the what, just that if, right? So really cool that you're solving for this, Alex. And I like that you're layering also different types of credentials and so forth to also, have support here. With that, a couple questions that came in along with some of mine, but the first one is really just as tokenized real estate starts to gain traction and grow, how important do you think privacy really affects real estate specifically as an asset class, and how do you think that's going to shape the market?
To be honest, I think privacy is more of a hygiene factor. I think privacy can become important in when layering trades and similar things. I think the real value proposition of a decentralized identity solution is less privacy, but more the interoperability aspect that comes with privacy. Most jurisdictions around the world have very strict data sharing requirements that you can bypass if the data is actually owned by the entity itself. So in our solution, by making data private, you're not handling and trading private data, you're just handling an abstract representation that such data exists and is available. So I see it more the other way around.
Yep, no, exactly right. And that's I'm glad that that's the answer you gave, because obviously it allows you to more easily be able to interact with DeFi applications and other things that could enhance again the real estate. Real estate, obviously will be traded, but also there's other utilities to it as well. Another question that came in from an anonymous attendee here, but they are asking, where their KYC data is stored in their mobile device, or if it's through the identity oracle. If you can just give a little bit more light on where that data is stored.
Yeah, it depends a little bit on the implementation. So we allow, I would say we're also storage agnostic. We have implementations where data is stored on centralized databases of our customers, but then fully encrypted and not accessible to that customer. We have implementations where data is stored on the self-sovereign identity wallet of the user, meaning on the storage of the mobile device. And we have implementations in which data is stored on a decentralized storage. So it depends a little bit on the implementation, have that flexibility.
Makes sense to me. Awesome. Well, thank you so much for this, Alex. And we will be moving to the next person also involved in RealEstate.Exchange here, which I believe is Privado ID. So we welcome the team up from Privado and let us know about your involvement. I'm sure you have a presentation as well to share. So Otto, take us away.
Thank you. I want to keep it simple. There's no slides. When the solution goes live on I believe later this month, you'll be able to experience just the simplicity of using just your MetaMask or Fitbit Wallet Connect wallet. You sign in, you get your KYC credential issued by zkMe. That gets stored into your web wallet, and then you can simply reuse it. Right? That's our vision at Privado ID. Simple, privacy preserving, KYC. Verifiable credentials that you can reuse. We're working to make this super easy. Our vision is that we don't lock you into a particular vendor, but we have a marketplace of vendors, right? So super happy to see the great work by zkMe here. But we have a variety of other vendors that you're going to be able to use. And the idea is that an open marketplace, right? This is more flexible than the other solution from the folks at Tokenized, the ERC3643, the T-Rex protocol, because we have this flexibility. So we don't lock you into a particular set of KYC vendors that are, controlled by them. So, but I'm happy to take on a couple questions and
Oh, sorry about that. Awesome. Yeah, I was expecting the presentation. Awesome. Well, appreciate that, Otto. Tell us a little bit about how Privado ID's DDoS solution is integrated with the Rex platform itself and how it's improving, user authentication, trust, stuff like that.
Yeah, absolutely. So our vision here is that, like I said, we don't lock you into a single vendor, right? We have the open marketplace. There is your Privado web wallet where you store your credentials. That gets created through your web wallet and controlled by your Ethereum key. There's no, let's say, ability for us to see the data inside your credential. All of the data is encrypted with your Ethereum key. That credential would then be issued by zkMe upon the proper due diligence and upon having verified your information. And then from there on, you're able to operate within the Rex platform by providing a zk proof derived from the data inside your credential, right? So with this technology, you're able to answer very simple questions in a privacy-preserving manner, including proving that you're not from a list of sanctioned countries, right? So that's a great ability to just prove that single attribute from your credential, proving that you have a valid AML status. And this could change over time, right? So you could have your credential right now not be in a sanctions list, but maybe over time something happens and some other development, or maybe you even become a politically exposed person. At that point, zkMe has the ability to act on that and then reject or revoke your credential. And so this is a very interesting feature as well that we have with verifiable credentials. And then you can prove that you're an accredited investor as well, right? So you could have the verification done for that, and then with that attribute, you just reveal that one attribute. You don't have to reveal all of this additional information of why you are an accredited investor through what means you acquired that, right? There's just that one Boolean yes or no. This is also very, we believe, privacy preserving because as you know, the folks at Tokenized, they use the on-chain ID, right? And this is using on-chain claims, which are not privacy preserving, right? We use decentralized identifiers and verifiable credentials combined with this ability for you to create zero-knowledge proofs from that data. So this is more privacy preserving than what Tokenized is doing for sure. And we believe this framework that Dito and DigiShares, their leadership in developing this, is going to really influence the rest of the industry in demonstrating the way forward, you know, the real privacy preserving on-chain way of doing it. So yeah.
Fantastic. Thorough answer there. Appreciate it. I do have to ask, though, on the flip side, what are some of the key challenges in identity verification for some of these assets, and how are you addressing some of those challenges?
Yes. One of the key challenges we believe is the reusable credentials for KYC, right? For being able to go through this process, complete the validation, but being able to reuse that credential, right? So this credential that you have and that you're going to have with zkMe, you're going to have it stored over there and you can reuse it, right? And it can evolve over time. So I think that's a great, you know, nice thing that it allows you to interoperate with many various token platforms. Another interesting standard is, a standardization aspect is important. Okay, it's no good if you just zkMe issues you one credential with one shape, and then another one of our issuers issues you a credential with a different shape, different set of fields, different address fields, different, you know, birth date information. We want to standardize and harmonize this, right? So to that end, we have created what we call the basic person schema, which is a standard that we are working with at the Decentralized Identity Foundation, DIF, where these sets of fields have been agreed to and standardized. And so zkMe is in fact using a standardized, harmonized KYC credential that all of our other KYC vendors are using. This maximizes interoperability, right? So that's an important thing. And then finally, I'd say abstracting and facilitating the payments with the payment rails, right? So this makes it very easy for the users to get onboarded, pay natively, either using ETH or stablecoins, and not have to worry about any of the other aspects. So all of that, in addition to this ability of you to use your Web3 authentication with your abstracted account, right? We're not locking you in to your signing with Google, signing with Facebook. This is true self-sovereign identity controlled by your Ethereum abstracted account.
Fantastic. I appreciate that, Otto. And as you can see, everyone, you know, obviously there's a lot of moving pieces here, you know, to building RealEstate.Exchange, right? You have the broker-dealer ATS on the back end, you have zkMe and Privado, Dito, right, involved on the privacy side, but also that helps and impacts on-ramp, off-ramp, of course, the investment itself, and a bunch of other future use cases too as Rex evolves. So I appreciate that and all the information supplied and insights from everyone involved in the platform. But let's look at the other side of the coin. This is the platform itself. Let's talk about clients. Who's using RealEstate.Exchange? So I do want to welcome up to the stage Katerina Dezerga, and I apologize if I mispronounced your name, from TradeEstate.
Yes, correct. Hello, guys. Good evening. So good to be here. So I represent a TradeEstate company. We are a traditional development company, but with lots of projects across the globe. But following the recent trend in blockchain technology, we recently launched our real-world asset token, which goes with RWA token. So today I would love to dive a little bit deeper. What is it exactly? So real world asset RV, let me share my screen also real quick. So our real world assets, RVA, present unique opportunities both for us as developers and for private investors seeking secure and profitable ventures. So what is RVA? RVA tokens and how do they work? RVA tokens are digital assets backed by real estate properties. These tokens allow investors to participate in multiple stages of the development of the project. So These stages are construction stage. Early investors can benefit from the property's appreciation and share in profit as its value grows. On this stage, we can offer around 26% of return. Next stage is operational stage. Token holders receive regular dividends generated from rental income. On this stage, we can offer around 7% return. And exit phase, investors can sell their tokens on the open market at any time, independently of the developer or management company. In essence, RVA tokens make real estate ownership more accessible, liquid, and diversified, opening the market to a broader range of investors. So advantages for investors. RVA tokens lower the entry threshold, allowing individuals to start investing with just a few $100s. Key benefits include security, passive income, liquidity, transparency, and investor control. Advantages for developers. Let me tell more about. So for investors, each token is backed by real estate assets that typically appreciates over time. If to talk about our project, we recently launched RVA token for our project Ascent Aventura in Miami, Florida, which can generate passive income. So unlike assets such as gold that merely preserve capital, real estate generates ongoing rental income. It also allows liquidity. Tokens can be traded on exchange without waiting years for property to be sold or completed. It also offers transparency. All transactions are recorded on the blockchain, ensuring full visibility and preventing manipulation. It offers investor control. Token holders manage their assets independently without relying on developers or management companies. In short, RVA tokens represent a new era of real estate investments, combining low entry barriers with high reliability and profitability. Advantages for developers. For developers, tokenization also opens new opportunities. Attracting additional capitals by selling tokens, developers can raise funds more efficiently, accelerating project timelines. Reducing reliance on bank financial, instead of depending solely on loans, developers can share profits with a wide pool of private investors. Real-time demand assessment. If a project's token do not attract buyers, this is a direct and transparent signal of market demand, far more accurate than relying on regulatory approvals that may not reflect real demand. In this way, RVA tokens enable developers to build what the market truly wants, rather than what is dictated by bureaucratic processes. So RVA tokens represent a revolutionary shift in real estate and investment markets. For investors, they offer secure income-generated assets with minimal entry barriers. For developers, they provide a modern financial model that fosters faster project realization and access to broader investment communities. And in Trade Estate company, we strongly believe that the future belongs to digital assets backed by tangible real-world value. While traditional markets cater to larger investors, RVA democratizes real estate, making it available to everyone. Thank you for your attention. You can find more information about our project at TradeEstate.org. We recently launched our token, and I'm open for questions, guys.
Well, the first one is the obvious one I have to ask. Why did you choose Rex as the platform to list your assets on versus maybe another platform?
In our opinion, you guys have lots of development opportunities for us, and we see it's like a good collaboration. So we are looking forward for it and very excited about our collaboration.
Fantastic. Yeah, no, as we saw on the demo today, there's a lot of functionality there or coming. So that's very exciting. And another question for you that came in was if you can just expand a little bit more on what your token legally represents. You know, is it equity, debt, something else related to the real estate? And tell us a little bit more about what differentiates your offering.
So as I said, RVA token is fully backed up by real estate assets. So it's not something that we can touch with. It's actually every person can start with a little low investment, like $100 and buy part of a real estate project, real estate project, I can say. So we have our project in Miami, Florida, which is called Ascent, and so this project will be fully tokenized. So at the beginning, at the first stage, every investor can come and buy a small part of this project with a little, like $100, like I said. So basically, this is our main advantage.
Fantastic, thank you. And as you know, you've been in real estate. You're now tokenizing and bringing it on chain. I'm a fan that it's a Miami property. We're based out of Miami here at STM, so a little biased there. We'll definitely be checking it out. But how do you see real estate tokenization evolving and really impacting this archaic market? And archaic, I'm meaning in terms of the existing legacy infrastructure.
I can say that this is our future actually, because not so many people can afford to buy like separate real estate, because market is changing drastically, and for small investors, it's a really good opportunity to start investing and to enter blockchain technologies.
Fantastic. Well, everyone on the webinar, obviously reach out to Katerina if you want to learn more about Trade Estate and the upcoming offering. Really, really exciting. Katerina, thank you so much for coming on and sharing a little bit more on, you know, why you're listing on Rex here. Another client that's also working with DigiShares and RealEstate.Exchange coming up to the stage, FraXion. So we'll welcome you guys up. Tell us about what you're working on.
Hi, thank you so much for having us. I'm Nathan Burrell, Managing Director of Real Estate and co-founder of the FraXion token. And I'll introduce my partner, Demetrius Ford, as well.
Hello, everyone. I'm Demetrius Ford, and my role is Managing Director of Digital Assets with FraXion.
And we are excited to be a part of Rex. We've started this journey about 4 or 5 years ago in creating tokenization and bringing real estate on chain. Our first offering for FraXion token was actually a debt token, and we did about 400,000 tokens on chain currently with Polygon, by the way. So we shout out to Polygon there. So this is a culmination of time, and the timing couldn't be better. I've been hearing about timing from so many of the partners, and for us, we're excited about Rex because of the exit strategy that we've been talking to our investors for quite some time. So the fact that it is now a reality, we are very, very excited about launching, which is our second project, is going to be an equity project. So we're excited about that. And I'm going to show a little bit of what that quality looks like. But yeah, this is something that we've been enduring, the crypto winter. We've been enduring the regime as far as the government. So the timing can be better as far as us being able to list the FraXion token on an alternative trading system. So we're excited about that. One of the things I want to do is I want to share my screen because I want to go into type of projects that we're looking to bring. Just very similar, institutional grade real estate investing, I think has one of the biggest opportunities as an asset class to be tokenized. What we're bringing is access as well as the liquidity aspect. But most people have been locked out of institutional grade, major real estate developments, the average retail investor, and even the accredited investor. Some of the projects that we're talking about has, you know, $100 million in capital acquisition. And so the level and barrier of entry is pretty high. With tokenization, those levels and barriers of entry can be minimum and minimized even for their credit investor, but definitely for the retail investor, they'll have an opportunity to participate through the FraXion token with institutional grade real estate. So just briefly, let me share my screen so I can show you the value and the type of quality that we're looking at to bring to Rex. Here we go. I hope everybody can see that. So this is the legacy development. I am from South Florida, born and raised here. So this project is smack dab in downtown Miami. This is called the Legacy Development Hotel and Residences. We're very excited to be working with the developer here, one of our major developers that we have been working with for the last 3 years. And this is the Legacy Hotel and Residences that we'll be bringing to Rex to list. And just to give you an idea of some of the things about it here, it is downtown Miami. If you see the other building, that is the Paramount building that he completed several years ago. And so Legacy is going right around the corner from downtown Miami, smack dab in the middle of major venues and things, including the Miami Arena, which is walking distance to this area. One of the things that we're excited about is that this is a full mixed use. One of the things that the developer calls it is it's a true mixed use, and you're going to see some of the things that we have here with the mixed use. It is going to be 310 residences, 219 hotels room. So again, there's plenty of opportunity for to earn income for our investors and digital partners that we're bringing online through the FraXion token. And as you can see, it's just a short distance from Brickell, South Beach, Wynwood, Design District, Little Havana, the Miami World Center. And like you said, it's truly in the center of everything. And, you know, so we're very, very excited. We think this is going to be a very hot asset class in the sense of it's in a place of Miami, downtown Miami, where a lot of investors would like to be. So just to be able to prove a concept, and my partner's going to talk more about that, but we're excited about proving the concept. And hopefully through the secondary exchange, through Rex, the capital acquisition and the cost of capital can come down from the standpoint of being able to raise capital for these types of projects. And again, giving that institutional investor or even the the retail investor an opportunity to participate. And you guys mentioned earlier before about expanding the base of investors to a wider group. So hopefully we can look at bringing down the cost of capital for some of our development partners as well through the Rex system. And finally, I want to just show you some of the true mixed use nature of Legacy. When you talk about the square footage and the percentage of the mixed use, one of the things that they're also excited about, and this is going to be kind of a proof of concept for them as well, but they're very excited about the medical office. So 8% of this mixed use facility is going to have medical offices within the Legacy downtown building here. So you talk about the residences, the hotel, the office use, ballroom, meeting space, the restaurants, the retail, it's all there in Legacy. And again, they're looking to do this all around the country. This is their first one that they're launching. So we're excited as FraXion to bring such a wonderful project on chain and to prove the concept to several developers that this is possible. So I think the timing, again, couldn't be better. We're excited about this being our project and one of the signature projects that we're going to be focused on over the next few months, in a sense, as we launch, and working with DigiShares and RealEstate.Exchange as well to launch this. So that's what I wanted to share. I'll turn it over to my partner, Demetrius, to go over some of the other details as well.
Yeah, thank you, Nathan. You know, so when we started FraXion, the goal was very simple: to provide a level playing field and institutional grade real estate investment. I've been in an investment banker and in private equities for over 30 years, and I've had a lot of clients just absolutely locked out of some of the best opportunities out there because of the high minimums. Daniel Codsey and his family, who own Royal Palm, who's this developer of this project, you know, they have built a lot of the downtown Miami skyline that you see in all the movies. Very well respected down here, and Dan is a very, very close friend of mine. So when we started out in this journey, my idea was to, other than try to list individual, smaller income producing properties or single family homes and put those on chain, my goal was to try to provide better access to non-institutional investors, whether they be retail or accredited, to opportunities like this. At the time when we first started speaking to Dan Kotze, the minimum investment in some of the projects like this was 5 million and up. So our idea, and this was going back to, when the blockchain was really getting started and there weren't a lot of players out there, our idea was to say, hey, give us an allocation of equity or debt in a project and let us go fractionalize that, hence our name FraXion, to allow better access and to also increase the investor base. Kotze loved the idea and gave us, a lot of different opportunities to choose from. But the legacy opportunity was just by far just the cream of the crop. And especially the fact that this is going to be the first of many of this brand. So we were fortunate enough to be the first non-institutional investor to be invited to participate in this particular development project, which is huge, for us. But we believe that this is going to lead to us putting literally over time over $1 billion on chain of this type, this quality. So this particular opportunity is projected an internal rate of return of 20% at the midpoint. It's going to throw off quite a bit of income to the investors for as long as they hold the tokens. But those that have a liquidity event need to raise some capital and have to sell. That's the other reason we're involved in tokenization of real estate, because liquidity is the holy grail in real estate. And to be able to allow investors liquidity in a historically illiquid asset is a huge advantage. So we're super excited about listing on Rex. We have an existing relationship with both Polygon and DigiShares, as it was before this was even talked about. So we're still keeping it in the family, so to speak, and we cannot wait to get this thing listed.
Yeah, I can't wait either. I've seen the legacy being built up. I'm eyeing it myself. So, it's very exciting to see that you guys are tokenizing this, and cool that you guys got an allocation to be able to tokenize and offer to, at fractional, opportunities here. I did want to ask, you mentioned that this will, obviously creates obviously has the IRR at 20%, but also some cash flow, right? So do you see distributions of that cash flow also happening on chain to the investors? What would that approach be like?
Well, we're working with the developers right now on that very thing. Being that it's a straight equity investment, we have to fall in line with the other equity investors, and they're going through a recapitalization with some of their lenders right now. And depending on how that shakes out, it's going to let us know what we can pass through. But even if there wasn't a rev share on the various revenue streams within the legacy brand, the equity in of itself, I mean, we're getting in at a time where this thing is just developing. We see very huge upside into the equity in the tokens. And we don't really expect a lot of turnover of investors, trying to get out very quickly once they get in. This is something that can provide a pretty good IRR for many years to come. And those same investors that invest with us in this project will obviously have first rights at investing in the follow-ons. So this brand is going to be a very successful and recognizable brand, not only here in Miami, but globally. And I
Absolutely.
also wanted to add, this is going to be a Regulation S in investment. I've seen a couple of comments asking about Reg S and things like that. So this is going to be available to investors outside the U.S. And again, it's only a $25 million offering. We expect it to sell out very, very quickly. But we will follow that up with a much larger round after we prove out the validity of Rex.
That makes sense to me. Absolutely, right. And 25 million sounds like it's somewhere in the sweet spot of offerings as we've seen in the past. So excited to see that. Again, what part of Rex do you think is the most value add for this offering? Obviously, we've talked about liquidity optionality. We've talked about obviously having that Web3 experience and whatnot. But what do you see as the bigger opportunity for you guys, and why'd you stick with DigiShares and Rex?
Well, I'll start with that and then I'll let Nate add. But going back to what I said about the relationships that we already have with Polygon and our early talks with DigiShares, it's very, very key to us to make sure that our tech partners are the best of breed, and you guys are. So, there's not a lot more to add to that. We're partnering with Rex because, the first dedicated real estate tokenization platform, for the types of real estate that we're putting on chain, it's a no-brainer for us.
Makes sense. And Nate, before you add on, I just want to remind the audience that we'll be doing a Q&A with everyone right after. So if you have any questions, please go ahead and submit them in the Q&A section of Zoom here. But Nate, please.
I would say the regulatory requirements. One of the things that we've been fighting when we launched FraXion is the mystique around crypto, the rug pulls and many of the projects that were just pump and dump schemes. I like the fact that Rex has the relationships with the SEC and with FINRA and those regulations, all those things. What it does is it adds credibility to the projects that we're doing, that when we're talking about doing tokenization and real world ads, that we're taking it very seriously, and that our investors can feel secure that we've passed muster, that we've passed background and due diligence, and so they can invest with assurance. So that's one of the things that we like about it as well, that adds on to it.
Sorry, I was on mute there. Fantastic. Thank you, Nathan. Appreciate the ad there. Awesome. Great. Well, I'd like to invite everyone else that has spoken, everyone on stage here, turn your cameras back on if you please, and we'll be starting the Q&A here with the audience. But again, I just want to reemphasize the excitement around RealEstate.Exchange here and applaud the DigiShares Rex teams, as well as every one of their partners and clients here for, bringing this to market. So we're very, very excited. First and foremost, I'll Claus, is there any last minute notes you want to add in there before we dive into Q&A?
No, it was a great pleasure to hear all the presentations. I'm really excited getting things started and getting the assets listed so we can make our promises come true.
Absolutely. Well, we'll be sifting through the questions here. But another question, will there be a Rex app version later in the future? Maybe like a mobile app? Is this something to be expected later on?
Yeah, good question. We haven't discussed it. I would say we haven't actually extended the roadmap that far out. We have many other more pressing concerns, I would say, but it's a great idea. I think we should definitely do it. Why not?
Why not, right? Make it as easy as possible. Maybe people can pay with Apple Pay, or one day maybe have stablecoin on Apple Pay. You never know. So really, really exciting there. There's concern around, obviously real estate lenders. I know someone talked about that, right? Dictating a lot of the deals. How do you approach, some of these lenders and really having them be open to tokenization? That's really open to the floor.
I can talk a little bit about what we've seen from our clients, but we'd love to hear from some of the developers who are on the call. What clients have told us is that there is an education process that needs to happen with the lender. There are traditional covenants that would prevent secondary trading of shares in some deals. So obviously, if there's a covenant like that, that would need to be taken out. But yeah, so what we've heard is quite a lot of lenders are open to blockchain technology, especially now with just the changes in the regulatory approach. But of course, there will be always a few that just don't want to get involved at all with blockchain. But I think that's going to become very rare as we go on.
Yeah, and a follow on from the same person, they're asking, how would there be total liquidity if you want to sell the asset and remove it from the blockchain? It sounds like maybe like that's if an asset had an exit, right? How would you go about that, and if that's possible?
Yes. So if the developer, the issuer wants to sell the property in a one-on-one transaction, they can do that. Obviously, if the shareholder agreement and PPM clearly states that it's within their rights, they would then receive the proceeds from the buyer, distribute to every single token holder, and then burn the tokens if the new buyer does not want it to be tradable on a secondary market. It's kind of like if you own a stock in a company that's getting acquired, a listed company on the NASDAQ, a similar thing would happen.
Absolutely. And I think we saw that with the Exodus token already happen in the past, right? Where they essentially de-tokenized and listed. So, there's precedent, but, I don't think it's terribly much of a challenge, if you will. Would REX be available for syndicated deals or Reg D, Reg CF funds only? And can an individual homeowner securitize their property? I guess this speaks to maybe the types of offerings that could be expected and so forth. Yeah.
Yeah, Reg D, Reg S, CF wouldn't be possible as of yet. We haven't really discussed that in the context of REX, but there are some regulations that impose a burden on platforms such as DigiShares for if they want to enable Reg CF. So there's FINRA regulations. So that's on the roadmap for the future, but it's not going to be available out of the box right now for Rex. So definitely Reg D, Reg S is the focus. If there's a Reg A, we can discuss that. We have a good partnership with BitGo on the SEC transfer agent side. So that could also be catered to. But the vast majority, or if not all, of the people we're speaking with are doing Reg D, Reg S, and oftentimes together. So people need to understand that most people do the Reg D and Reg S together because it's 95% of the same legal work and the same PPM and subscription agreements. It's just there are a few disclosures and clauses that change, but so it's quite attractive to do Reg D and Reg S simultaneously. And if I may add one last thing, I was really excited to hear that zkMe just added accredited investor credentials to their portfolio because that means that we could very easily enable Reg D investors to trade after 90 days, and then all of the rest can trade after a year. So just it gives us a lot of flexibility.
Makes sense. And question, zkMe, real quick. Who are you using for accreditation checks? Is it yourselves or another provider that you're working with?
We're leveraging actually the IRS directly. So we're leveraging a technology called zkTLS, in which entities can log into their IRS accounts and self-generate the accreditation.
Got it. Very nice. Another question. This one's anonymous. What is DigiShares doing or will be doing to ensure liquidity on REX? Is there any market making mechanism in place or exploration of that?
So there's no market making in the traditional sense, like on the stock market where you have these massive market makers that have positions on both ends of a stock. This is an order book system, but it's peer-to-peer. So investors see the different orders and can position themselves as the counterparty. It's also not, there's no market making in the DeFi sense. So this is not an AMM, an automated market maker type of infrastructure. Although we are looking to develop that in jurisdictions where it may be permitted. So we're in the sandbox in Europe for that, and looking at UAE and South Africa. So in the US for now, there won't be market making in that sense. But what we will do as a company, and all of the stakeholders here will be a big part of this, is just get the word out, to all of our communities of followers. Obviously, Polygon has a huge one, so that would be great to get everyone interested in Polygon to sign up and take a look at Rex, and then as issuers join Rex, they will bring their own community of investors, and so we're hoping for cross-pollination and to get the network effects going.
Fantastic. Thank you, Gabriel. This next question is really open to the whole room, so any panelists that would like to jump in and offer your thoughts, please do. The question comes from Paul DiCesare asking, if we do in fact have a slowdown in the US economy or even a recession in the next 6 to 12 months, how do you think this will affect the desire for real estate tokenization? Don't all jump in at once.
I can talk, but I don't want to be the only one talking. Sorry if I'm talking too much, but I can start. So I actually think that it's in the time of crisis that liquidity is the most useful, because you'll have people that want to get out. Traditionally, they can't. And then you'll have smart investors that'll spot a great investment opportunity, maybe at a lower price, compared to a time when the market is hot and prices are exorbitant. So I actually think something like tokenization that can enable liquidity is even more useful in a time of crisis potentially. Now that does not mean that I hope there's going to be a massive economic crisis, but it would be useful for tokenization would be useful in that scenario.
But I have to say I agree with Gabriel, and also there's just been huge interest in this project. As soon as people saw that I was a speaker in this DigiShares panel, I have 5 friends of mine from Costa Rica who all work in real estate saying, hey, I want to work with DigiShares. This is great. They're all in the real estate sector in the Pacific in Costa Rica, and they're all interested in talking to you guys. So, I mean, I don't see any slowdown on interest in this platform at all.
All righty. Well, if no other thoughts, thank you both for the thoughts there. Another question, besides supply and demand dynamics of the exchange, what are you using to determine the intrinsic value of the property?
I can start on that one. There's 2 sides. There's the primary issuance, which is when an issuer, so a real estate developer fund, sells shares to investors. And then there's secondary trading, which is what's going to mostly happen on Rex, where the issuer is not a party in the transaction, it's just traders interacting with each other. For the primary issuance, the issuer sets the price, the valuation. They'll provide an investment memorandum with a business plan, appraisals, all the supporting documents that support the price that they've set. And then once trading starts, the market decides of the price, but they'll be guided by those the documents, the same documents that support that supported the initial valuation, and every maybe month, quarter, semester, you could have a an update, so like updated cash flow statement or an updated appraisal or updated business plan. So if something changes, or even just to keep people informed, the market will know and can act accordingly.
Noted. Actually, another question for me actually would be, if you guys are, obviously there's the market dynamics and whatnot on the P2P side, but of course, is there issuer managed liquidity that could be enabled? Like if an issuer wanted to put in like their own liquidity pool, would this be an option or something down the road?
Definitely down the road for especially the AMM version. Yeah, I could totally see that happening.
Awesome. Andy's asking, what is the ballpark timeline to go from 0 to the first listing on Rex?
So maybe that's for texture in terms of like how long the typical due diligence takes on their side. Maybe I'll ask Richard.
2 weeks. We can get that going pretty quickly. Yeah.
That's fast. We like fast.
So sign up.
Yeah, absolutely. Question for the clients actually that I have is, obviously with blockchain, you're enabling a lot of your fractional investments, or at least easier to do. Obviously, it's doable off chain, but the blockchain helps. You have on-chain distributions that could be explored down the road, of course. Some we've already seen in other offerings. We talked about DeFi potentials in the future, but I also wanted to ask about the investors. How are you, or are there plans to leverage the blockchain to truly engage with the investors? We've seen in past real estate tokenized assets that, because you know exactly who your investors are, you can award them perks. We've seen, I know some of this, it has a hotel component, for example. Maybe it's like free nights or maybe some perks at the restaurant. We've seen in Japan, we've seen people get a voucher for their gift shop. Just curious to see if there's anything of that sort that's being in conversation with the clients and the assets that you guys are tokenizing.
Yeah, I'll start on that one. Absolutely. We're talking about NFTs actually at certain levels of investment that would give certain perks to the investors. Like you invest X, you get an NFT that gets you on the red carpet at the grand opening and gets you a suite at the hotel for a weekend and things like that. We're partnering with a lot of the local venues. You're down here in Miami, so with the Miami Heat, Florida Marlins, some of the local nightclubs and high-end restaurants. We're working with perks there. This particular property, though, and we didn't really go into too much detail, but 5 floors on this building are all dedicated to health and wellness. And you're going to have world-class medical care here, and it's going to be almost one of those destinations where, those medical vacation type destinations where people come in right in the heart of Miami Beach, right by the cruise terminals, and they can have not only medical care, but there's also preventative type services and screenings for cancers and all this other thing. So there's gonna be access to that for these investors as well. So this brand, like I said in the beginning, is an incredible brand, and the advantages that we're gonna pass through to the investors. And we're not talking about the people that are actually buying properties there. Our investors are going to be treated as if they're real partners in this project, and there's going to be a lot of perks involved there.
Fantastic. I pass the same question over to. By the way, that's great perks. Very exciting, and it's also you're using the what's available at the building, but it looks like you're also expanding to surroundings as well, which is really cool to involve more of the community and obviously the ecosystem that the building revolves around. Also, same question for the other team as well. If there's something there that you'd like to add or what you're approaching is. Maybe not. Okay. Another question. Let's see in the chat here. How is capital appreciation of the real estate assets going to be reflected on the exchange?
Yeah, I guess that would fit into the answer I gave previously, where issuers will keep the investor community updated on the cash flows, on any new appraisals, business plans, and then a smart investor will know that the property is worth more, and so the market price would increase.
Got it. And another question from Mark here. I think we might have addressed this earlier, but if you can reiterate, how are dividends or rents from properties accounted for and distributed to token holders?
That's a functionality within the DigiShares platform. You can send out distributions to token holders, just a few clicks, and it all goes out to everyone's wallet.
All right, easy and simple. We like that. Let's see. As an investor, I want to ensure my trades settle quickly and without high fees. How does Polygon enhance the speed and affordability of transactions on Rex compared to other blockchain networks? Colin, I think you alluded to this earlier, but if you can remind us really what Polygon is enhancing here.
Yeah, super easy, super low fees. It's the bottom line.
Super easy, super low, super fast. All right. Fantastic. Okay, everyone. So we all know that things are moving in the space now. A lot of institutions are diving in and opening up to the possibility of coming on chain, and not just in the U.S. but other parts of the world too. So, question for for our panelists here: where do you think? There's predictions, by the way, all over the place as to where we're going to hit, tokenized RWAs by 2030. But I'm curious about your predictions on where we're going to close out the year. Right now, we're at around $61 billion in market cap for RWAs, excluding stablecoins. Where do you feel we're going to be by the end of 2025?
I'll take the first shot. I'm super bullish on that, in part because I see money market funds on chain being a much better form of collateral. So collateral market is massive globally. And I see probably 30 to 50 billion coming from that direction alone. And I think once the major exchanges start accepting this stuff as collateral, that happens pretty quickly. So that's just the start. But I believe that the more liquidity you have in all of these instruments, it has knock-on effects throughout the entire ecosystem, including Rex, right? So more liquidity on the money market fund side, more money in this ecosystem globally, it will flow through to every asset class. So I couldn't really tell you, but I see it. If I had to like pick a number out of a hat, I would say at least a double from where it is, taking a shot by year end.
Ooh, that's exciting. What other predictions do we have here from the panel?
I'll say, yeah, I won't venture a number, but I'll venture that more of it's going to be happening on Polygon. I see that trend clearly going, and definitely reusable identity, is going to play a part in this, right? So, the good work from zkMe on this, will be fundamental in influencing other actors into also deploying on Polygon and seeing these tokenized assets moving around.
I can say that at Texture, we've got over $800 million worth of deals for tokenization on the platform. Some of that is real estate, some of it not. So hopefully those get funded and we can add those to your tally.
Ooh, can't wait. Can't wait. Hopefully all of them. Let's go. That's fantastic. How about any of the clients? Where do you guys see some of the RWA space growing?
Well, for me, I see this, turning into something that, you almost can't imagine right now. I mean, in the short time that I've been involved in it, in the blockchain and tokenization. It's just, you know, every day you learn something new, but it's very, very refreshing to see the direction. You know, we as a company have kind of weathered what my partner called the crypto winter, because there was so much uncertainty and so much talk about regulation and, you know, a lot of fear and things like that. And we're starting to see that change in a big way. You know, say what you want about, you know, the new administration, but, you know, they're in our corner in a real big way as well. So as far as my firm goes, you know, our immediate goal or plan is to put, like I said, at least $1 billion of real estate assets on chain as fast as we can. And we've partnered with some of the biggest and best developers out there that, you know, kind of want to stick their toe in the water, so to speak, with tokenization, see if it works. For example, you know, the legacy project, RPC Holdings, you know, that developer has basically told us from the beginning, listen, if you're successful with this $25 million raise, you know, these guys all want to be their own bank. You know, they're tired of the exorbitant fees that they're paying to the investment bankers and all the regulation and this, that, and the other thing. And if, you know, they really get the sense that they can tokenize and knock out a lot of those fees and have more control of both the debt and equity side, that's what they want. So, you know, and I'm just speaking for my firm, I know that I'm going to have such a pipeline to put on chain once, you know, we prove out that we can do this on Rex. You know, it's going to be an amazing thing to see. But I see the industry as nothing but a hockey stick move to the upside over the next 10 years or so.
You like good hockey sticks. Very nice. We have just a little bit of time left here. So moving on to other questions here. Very exciting predictions, guys. Really can't wait to see where we end the year there. But yes, real estate is definitely going to be one of those heavy hitters, and the bigger the issuances come on, the better, of course, because that helps grow the market for all of us. A question from Ferdinand: how are you protecting investors from property owners who might likely dispose of the assets without informing the system?
I think ultimately there's always going to be the risk of issuers acting, you know, in a malicious way, and you know, that's why you have the legal system. So because these are securities, if something like that happens, for sure there would be a lawsuit. Like if, you know, if they don't respect the terms of the shareholder agreement, yeah, you'll always have recourse with the legal system. But there's nothing really on chain, I think, that can prevent that from happening.
But I could add that there's more transparency, right? So you can see what's going on to a much higher degree because a lot of stuff is on chain. So it's maybe harder to cheat and less ways to cheat. But it can still be done. You can't completely prevent it.
Right. Unless you have some kind of, you know, mechanism that says, well, you can only sell up to X amount or percentage of your holdings, but then, you know, obviously that has other implications, and I'm sure there's a legal side to that. So not advice here, but just thinking aloud. But again, you know, to your point, Klaus, it's the blockchain is there, it's transparent. Anyone can go on Polyscan and see what's going on, or Polygon Scan, right? And see, you know, who dumped. And if it's identified that it was the issuer, well, maybe that issuer won't be so, you know, so well off next time they want to raise capital, because maybe their reputation has been tarnished. So that's also something to keep in mind from the issuance perspective is, you know, obviously we want the, you know, some good actors. We don't want bad actors to ruin the party for everyone. All right. I'm going to open it up to the panelists actually and see if there are any, you know, final thoughts that any of you want to share with the audience here, whether it's insights on the market, things that, you know, you might have missed earlier that you want to make sure that people are aware about what you're working on, or your any thoughts on the Rex platform.
I just quickly before I saw a bunch of different questions about, you know, is it possible to tokenize assets in India, in South Africa, in the Middle East. Just want to give a general answer to that. You can, in the context of Rex, you can create a U.S. entity that owns assets in all of those different parts of the world and tokenize that entity and list on Rex. So it is possible.
All right. Well, thank you, Gabriel. So yeah, any final thoughts from the audience here?
I'll just say I put my email in the chat a couple of times there. Feel free to reach out, rich@texture.capital, if you'd like to discuss any of this in more detail.
Also super excited for this. I want to congratulate Claus and Martin on the super hard work that they've done. I know this has been a long time coming. It's been a lot of long late nights for them, and I'm really excited for this. Congratulations, guys.
Thanks. Likewise.
Fantastic. And one other question actually came in the chat here. How is an investor able to check the balance, the truthfulness of the different revenue streams? For example, if there was rental income figures on any given property, tokenized property, is there anywhere to like verify that, or will there be any solid auditing requirements? Yeah, any one of you that could speak to that.
Well, I'll speak from the way we handle that. You know, we're going to provide quarterly updates to all of our investors. We handle investor relations as if we were a public company. So we're very, very transparent. So all the reports that we get from the developer on everything, we're gonna transmit through the blockchain. You know, and that's what we love so much about it. And when you want to communicate with thousands of people, you click a button and it goes out to everyone at the same time. But you know, we're partners with our investors. So, you know, we're in the equity with them. So every time we learn of anything, we're going to communicate that. So we're very, very transparent and very, very quick with communicating.
All distributions are logged on the chain also, right? So that's completely transparent. So that's at least half a response.
All right. Well, fantastic. Thank you all so much for being here, for celebrating RealEstate.Exchange and their launch. Appreciate the attendees, but of course our panelists that are here too, providing their insights and what's going on and how they're involved and really shaping capital markets and specifically real estate. As we all know, real estate legacy systems are just very old and very much need of an upgrade. And I think tokenization is that upgrade for the markets here. So really excited to see this go live. Self-plug here, go visit stm.co if you want to track, tokenized RWAs. We track a lot of them, and hopefully we will be tracking the ones trading on Rex soon enough as well. So thank you all. I'll pass it over back to Claus if there are any closing thoughts that you have here for the audience before we close it out.
Well, I just want to thank all the speakers for participating today and to the audience for a lot of good questions. Hopefully we will go into production within a few weeks and we can start trading. Thanks a lot.
Fantastic. Looking forward to it. Thank you all.